Do you want to buy a property in the UK but have no idea where to start? Well, don't worry, this step-by-step guide is going to take you from being clueless to confident. So let's get started. Step 1 is to check your finances. Firstly, do you have a deposit available? Most lenders are going to want to deposit a minimum of 5%. It could be more depending on your circumstances and the lender. You'll also need cash for costs of buy-in. So if you're buying a home, you're going to need to pay for a solicitor as well. And there could also be other costs associated with buying a property. So you'll want to check what those costs are going to be, and do you have enough, or can you save enough? Once you've sorted your deposit and your fees, you'll want to look at your credit report. You can go on websites like Equifax, Experian, Check My File, and there are others, and they'll help you see where you stand with your credit. It's your credit score, but also what's on your credit report. The score isn't everything. It's more about, are you up to date with your credit commitments, and have you always been up to date, or have you missed any payments, had late payments, or have you had defaults and CCJs? You're going to want to be aware of what's on your credit report. That's going to give you a good idea of where you stand. If you have poor credit, if you have adverse credit, such as defaults and CCJs, you might still be able to get a mortgage, and you might still be able to get a mortgage with only a 5% deposit. But in some cases, if you do have poor credit, you might need a bigger deposit. And of course, in some cases, you might not get approved at all. It'll totally depend on what your credit looks like and your other circumstances as well, and which lenders you're looking at. And the final part of checking your finances is to look at your bank statements. What's coming in and what's going out? Do you need to make any big changes, or is it already all looking good? Are you already bringing in a lot more than you are spending? Because if you are spending everything that's going out, that could worry a mortgage lender when you come to apply, especially if right now you're not already paying for a mortgage or paying rent. For example, if you're living for free at the minute with parents or family or friends, but you're still spending everything that comes in, that could look to the lender like, well, you can't afford a mortgage because you already spend everything that you earn. So if big changes are needed on your bank statements, my advice is to do that right now. Don't wait until you're applying for a mortgage, because then it could be too late. Your bank statements will be assessed when you apply for a mortgage. So have a look at your bank statements, see how they are looking. Is there anything on there that lenders might not want to see, especially gambling? If you gamble just a little bit, a £5 a week, totally fine. But if your bank statements just show gambling transactions just non-stop and you're spending a lot of money every month on that, then I would recommend you cut that out too, because lenders could be put off by that. Step 2 is to get your documents in order. You might have a really good job, and you might be really good at managing your money, and you might be registered at the correct address, but none of that matters if you can't prove it. So you need access to your payslips, employment contract, P60, bank statements, photo ID with your correct address. There might be some things that I've mentioned there that you might not even get asked for, but you could be asked for any of those documents, and you could be asked for more. So before you start the process, make sure you've got all of these documents ready, and if you haven't, start looking into how to get them. Some people come to look for their payslips and just can't find them. If that's the case, contact your employer's HR and ask, how do you get your payslips? Bank statements, often they'll be available on the app, but if you can't find them on your banking app, then you're going to want to nip down to the bank and find out how to get those statements, because you're definitely going to need them. And sometimes you might check your ID and realize, oops, your driver license shows your old address, you forgot to change it. That's not ideal when you're applying for a mortgage. If that's the case, you'll want to get that updated as soon as possible. And of course, make sure your IDs are valid. You're not going to get far if your driving license or your passport has already expired. Step 3 is to have a think about what type of mortgage you might want. Now, you'll speak to your mortgage advisor about this and they'll explain in more depth the different options you have. But you're going to be deciding how long you want a mortgage over. For example, 25, 30, 35, 40 years. The shorter you take a mortgage over, the sooner you're mortgage free, but also the higher the monthly payments. So you might think it's best to stretch it out over a long period. But then what age are you going to be when you're finally mortgage free? These are all things you're going to need to start to think about. And to do that, you'll need to also think about how much you can afford per month. But you'll already know that because you've already checked your bank statements when you were checking your finances. You'll also want to think about what type of mortgage you want. Do you prefer a fixed rate where you know exactly what you're paying for a set number of years, or one that's not fixed, where your interest rate can go up and down in line with interest rates? There are a few different options there, so you'll want to think which one works best for you. Quick side note, if you're somebody like me who prefers peace of mind, you might want to consider a fixed rate so you know exactly what you're paying and your monthly payments are not going to fluctuate month to month. But not everyone is the same. It all comes down to your personal preferences and your situation. And step 4 is to get an agreement in principle. And just to annoy you, it's got lots of different names. Some people call it an agreement in principle. Some people call it a decision in principle, a pre-approval, a mortgage in principle, and there are probably other names for it too. So it's super confusing, but you need one. Whatever you want to call it. If you want to make an offer on a property, the estate agent is usually going to ask if you have one of these. And if you say no, they're not going to think you're a serious buyer. It's much better if you can say yes. Once you have an agreement in principle, or mortgage in principle, or whatever you want to call it, it's important to know that that is not guaranteed acceptance. It just means you've been approved in principle to borrow a certain amount. Step 5 is to apply for your mortgage. You don't do this until you found a property and had an offer accepted. So you've had your mortgage in principle, which has allowed you to go and make an offer on a property, and now you've made an offer and that has been accepted. It's time to apply for your mortgage. If you were using a mortgage broker or a mortgage advisor, again, same thing, they'll take care of this application process for you, or you might be doing it on your own. Now, you'll send documents to the lender, things like bank statements, pay slips. They might want employment contracts, P60s. They might even want more. They'll also do a valuation of the property. Sometimes it'll be a physical valuation where they'll send somebody to look at the property in person. Sometimes it'll be an online valuation, and sometimes an automated one, which is done by a computer. The reason for the valuation is that that property is the security. Your mortgage is secured by that property. So the lender wants to make sure that property is worth what you are paying for it in case they ever have to repossess it. But we don't want to talk about repossessions. Hopefully that's never going to happen. Also, as part of your application process, they might ask some questions. Don't panic. Totally normal. This lender might be about to lend you tens or hundreds of thousands of pounds. So if there's anything they're unsure about, it's going to be very normal for them to just get in touch and ask you. So don't panic about that. They might sometimes ask you about transactions on your bank statements. They might say, we can see money coming in from this person. What is it? We can see money going out to this person or this company. What is that? Totally normal. Don't panic. Just be honest and be totally clear. And the application timescales, honestly, can be anything from a couple of days in some rare examples to 6 weeks if it's a longer process. It totally depends on loads of different things, including which lender you're applying with. So there is really no way to say how long the mortgage application could take. Your mortgage advisor might be able to give a better indication if they know the general timelines for that specific lender at that specific time. And step 6 is where you get your mortgage offer and you complete. Unfortunately, it's not that quick. There's a long gap between getting your mortgage offer and completing, usually. Your mortgage offer is where the lender has fully approved your application, and you will receive a mortgage offer, your mortgage advisor will receive their copy, and your solicitor will receive a copy, and that means you are totally approved. From there, you're really waiting for the solicitor to complete the legal work, and then you can exchange contracts and complete, where you get the keys. But sometimes there's a long gap. Sometimes there's lots of waiting and delays with the legal process. It can be a little bit boring and frustrating, but that's just how it is. And finally, insurance. You might want to look at things like life insurance, critical illness insurance, and income protection. Generally, those insurances will be recommended if you are taking out a mortgage. And there's one insurance that usually you have to have, which is buildings insurance. So you'll want to make sure you get these set up, but your solicitor will ask you to send them proof that you've got the buildings insurance. If you wanted things like life insurance, critical illness insurance, and income protection, often your mortgage advisor will also be able to help with this, but that's not always the case, in which case you might want to contact an insurance broker or an insurance advisor. And that is the end of this step-by-step guide of how to purchase a property in the UK. It's designed to be simple and easy to understand. So, of course, as always, if you need any extra help, please don't hesitate to just get in touch and I'll do whatever I can to help explain it in more depth. Thank you. Wait, sorry. Quickly, before you go, can you do me a massive favour? Just click subscribe. It helps massively to be successful on YouTube if people click the subscribe button. It only takes 2 seconds, so please do me a massive favour and do that. Okay, thank you. See you next time.